Welcome back to another Wealth Catchers video. Appreciate you guys stopping by, checking out the channel. Hopefully you guys are having a great day. And as y'all have known, so far this week's been pretty good for the markets. We have hit all-time highs again. So pretty crazy to go back from where we were basically a month ago to where we're at now. So definitely some, I guess you could say, a little confusing, but also pretty exciting as well, especially seeing all the portfolios go back in the green. And for those that, definitely added to positions, took advantage, definitely feel good about that. So today we're going to dive into, obviously looking into SPY and the Qs, because both of those have notched all-time highs. We're going to look at RSP, that's the equal weighted ETF as well. Then we're going to close out looking at SanDisk and Micron, and then a memory ETF. So without further ado, let's go into it. So first thing, obviously, as we mentioned earlier, SP 500 post new record close, and the Nasdaq is in its longest win streak since 2009. So with all this going on, especially with the war and all that stuff, and all the things that we have been dealing with lately in the market, and I think pretty sure for last video and both of those, they mentioned that like it doesn't make sense, right? The market's kind of like disengaged from reality. So the thing is, when it comes to like the market and all that, you could say it's a forward looking mechanism. It's taking into account things, right? So that's why some of you hear stuff like, oh, the price is baked in, or this is already factored in. So the way the market's moving is it's expecting, okay, this war is eventually going to come to an end, which, you know, we do want that to happen as well, right? Eventually it is supposed to come to an end. Now, I think it's just about how quickly all these things are being priced in and factored in, right? So for the market right now, after we had that whole back and forth with energy, we had that whole back and forth with the oil and all those type of things, we're still feeling those effects right now as the everyday consumer. But for the market, it's like, okay, we're on to the next topic, bro. Like, we've been here, done that, had fun for about 6 weeks, going back and forth. Now, let's just go to new all-time highs. Because once we go over to the next tab, we're going to look at to the fear and greed index, and that will tell the story. So we just go right there right now. Fear and greed index is going to tell the story. So just even a few days ago, we were in fear, right? So a week ago, we're at 37 right here. So just a week ago, we were in the 30s in fear. A month ago, we were in extreme fear at 20. Now we're back into greed for 62. That's how quickly things changed around once market sentiment and the feeling in the market changed around. And then as soon as you get that optimism back into the market and people are starting to think more positively about stuff down the line, they're going to start pouring their money back in there. And to still be surprised when you look at it, especially when we go look at the RSP, the equal weight ETF, that's still not the whole market rallying, right? So this is more of a concentrated rally. So you're going to start seeing, if you've been paying attention to Microsoft, for example, I'm going to do a video. My next video is going to be on the Mag 7 or Mag 8, Mag 10, whatever you guys want to call them now. But Microsoft alone in the past, from between today and yesterday, I think ran by itself $40, $50. So just those type of things have been happening in those small pockets. Software is slowly running up. The chart looks the same as it did when it did that first run up and then fell off again. But there are certain names that are rallying, and obviously it's not a broad rally, but definitely getting more narrow. Something like Nvidia popped 10%. So we're seeing the names that have either been consolidating for a while or that were beaten down gain momentum, and they're coming back with, you know, coming back pretty quickly. How quick they're bouncing back. So we look at the fear and greed again. We're back into a greed market again, all-time highs, and we know how we feel about greed. You know, take your chances if you want with that too. But again, when we look at the charts, the chances were when we were hitting those moving averages, those key levels, those are the opportunities. Again, when everyone's the sky is falling, the sky is falling, this is bad. Those are the opportunities you start building your positions in. I'm not saying you can't find no winning positions now. You can. There's a lot of names that are still beating up. But if you're someone that's trying to buy into the broad market, and if you're someone trying to buy quality names, there's still some quality out there. Something like Microsoft, still very much beaten up. Something like CrowdStrike, still very much beaten up. You know, but definitely still be cautious because again, even with this rally, you never know what could happen. But usually, what history tells, you hit a new all-time high. Usually, all-time highs just beget more all-time highs. So it just becomes a routine thing, right? Especially after we came from such a um, pessimistic type of environment, we most likely are probably going to be in this optimism type of environment for a little while. But it is positive again. Like I said, you're looking at your account now, especially greed. If you're trading, your trade's probably going to be more cleaner, more easier versus all the whiplash and stuff you have back and forth. So then we're going to go back to look at that market momentum, the S&P 500 versus the 125-day moving average. You see again, we talked about when we first got here, and then you look at for the whole month of March, pretty much was a buying opportunity, right? If you were to follow this for the whole month of March, that was like your window for buying individual shares, buying the market, buying your key ETFs, whatever your fancy is. And then you see here we blew past that line, and then again to an all-time high, breaking 7,000. So now let's go ahead, hop into the charts. Going to start off with the SPY, so the S&P 500. So looking at that, again, we've seen that when we got to the 253, my gray line here, that's when we kind of found support there, bounced off of that, and then we gapped up to the 50. And after that, it has a couple trading sessions, and then just the train didn't stop, just kept going up. Again, all-time highs, turned green on the year. It's definitely a great sign. And right now we're in April. Obviously, mid-April, we still got the rest of the year to go on. Who knows what other antics or other things that could come into play, especially with the new Fed chair coming in, how his take's going to be on interest rates, stuff like that. But right now, it's a good feeling to have. But we still have more things happening, right? How long is the war going to actually last, right? The trickle down effects from oil being at the price that it was, right? And talking about the economy, talking about our jobs in the economy, and talking about the potential of, the things going on with the farmers and them getting fertilizer that's being delayed. So all these things we're gonna see how it's playing out, right? And also don't forget the credit risk thing is still happening, right? All these people that are investors coming knocking on their door, hey, I need my investment back, right? So don't forget that's still happening with the credit risk. But banks came out, they had their great earnings as well. Like your JP Morgan, your Goldman Sachs and all them, they had great numbers. But there's still things going on that, yes, we're in a good spot. Yes, things are green. Everything's, sunshine and rainbows. But don't forget, we had right around here, it was not sunshine and rainbows. Everybody was hurting. Everybody was feeling some type of way about stuff. And now we're up here. Don't forget about this that happened, right? And don't forget about what could happen, right? That's why, again, mark off your key levels, mark off your key moving averages and your opportunities, right? So again, someone up here, don't chase the 702, the new all-time high. When it got to that 100, that 200, 253, 400, whatever your line is for you, that's when it's like, okay, you start building. So the person who bought right around here, the 623 in the mid 600s, he's a happy camper right now. He's definitely excited that he or she made their investment at 650-ish. Even if they got in at 700, no, my bad, not 700, but 660, right? And rolled it up to 700 plus. They're definitely happy right now. So again, we'll go here, look at here, see RSI was at the oversold, and you see we're about to break into overbought territory right now. MACD is obviously going insane. right now as well. Let's go and look at the weekly. Weekly, you're gonna see that sharp bounce too. So remember, we had touched the 72, and we bounced off of that, and then all-time highs. Look at this sharp move on the RSI from being around 35-ish, and now we're at 61. And then MACD is just curling here. So remember, MACD is a lagging indicator, right? So that's just beginning to curl. And if this cross is over, remember this is the weekly chart. So this cross is over, it's just going to be a sign that that momentum is even more stronger. So obviously we see the momentum on the daily chart, but when we see that also on the weekly chart, it's just going to reaffirm how strong of a move that actually is, right? So we also going to probably need like another week or two of more green and volume behind these type of trades like this for this to fully cross over. And this starts looking parabolic, almost like it does on the daily chart, how we see over here. Then we're talking about, you know, SPY going, hitting, 720, 730. We're talking about like it's really moving. But again, be happy if you took advantage of the opportunity here. You rolled it up to, 702. Again, you're buying at key levels. That's the name of the game. And then, especially again, we cater to buy and hold. That's our thesis over here. That's our strategy. So definitely, if you buy and hold in, you're in a good spot. Now, we look at the Qs. Qs had the same story around the 253. Same thing. Got up here, shot up to after the gap up, shot up to the 72 and to the 100 moving average, and then it just started going on a run over the past 4 sessions to another all-time high. RSI showing the same story. This one's actually tapped into the overbought territory after leaving the oversold. And the same thing, MACD, damn near parabolic on there. Let's go over to the weekly. And the weekly, their MACD is actually pretty close to the crossing over. RSI, same story, was in those mid 30s. Now it's at 62. And nice and strong above the moving averages on the weekly chart. So next one that's going to need to come into play is obviously Dow Jones, but we know they're a different index how they carry themselves. And then we go ahead and look at I didn't put them on the list right now, but we usually look at them all together. But look at the small caps, because they were actually surprising being able to hold up through all this. So yeah, so small caps still haven't hit new all-time highs yet, but they're running just as well, right? So all-time high is 271.60. They're about $2 away, dollar and change away. So everything keeps running how it is right now. Pretty soon to say, sometime maybe next week they should be able to hit the all-time high. We'll see if everything still keeps pushing. But eventually, things are going to get exhausted. You need to take a pause and take a breather. But again, usually hit an all-time high, a series of all-time highs starts to happen, right? And then obviously you're going to reach a point where exhaustion, everyone's cool, start cooling down a little bit, and then the cycle repeats itself. So let's go look at RSP. So RSP is the equal weighted index. This was something just to look into to solidify that this rally that we're going through right now and hitting the all-time highs isn't driven by the entire market. It's definitely being driven by a narrow market. So kind of pushing back into those single names of like your Mag 7. Not saying that particular group, but that same mindset of like, oh, the market's concentrated and that's why the market's rallying and things of that nature, right? So obviously, like I said, when I mentioned Microsoft, there's some names in tech that are getting that boost back into them and other things. So something like energy, who was leading the market for most of the year, they're not gonna move the S&P 500. They make up like 3% of the S&P 500, right? That sector. And then so something like that, RSP is going to reflect again how the whole market is looking, right? So the fact that RSP hasn't hit all-time highs just let you know that okay, so this is more of a concentrated rally, right? So there's a small select few names that are pushing this market up, pushing this rally up. RSP is still doing good. You can tell from the chart. It too had its gap up. Now it's above all moving averages. It's about $5 away from its all-time high. So they're doing pretty good as well. But looking at the SPY and seeing what it's done, hitting a new all-time high for the SP 500 just gives you some insight on, okay, so this is more concentrated than it is broad, right? So RSP looking pretty good. MACD looks strong as well. Same thing. It was in oversold territory, hitting that 200, and then RSI is at 63. So they almost mirror each other. But again, it's just a more concentrated rally on terms of who's moving the market and what's moving the market. And then we'll look at the weekly. Weekly, almost like it showed them bouncing off of the, what is it? I hate when it does this. I zoom in too much. Go back and fix this. Daily, weekly, 1, 2. There we go. So yeah, so for RSP and for them during this whole downturn and downfall we've been having in the market over these past few weeks, they bounced off the 50. So for them, their support was around the 50, and it bounced off of that. So, and then the same thing for them, MACD's began to curl. RSI never really got into a troublesome spot, kind of balanced out at the 40s, so pretty much near neutral during that time period. But definitely something to keep an eye on, just to let you know just how strong that concentration may be in terms of looking at the S&P 500 versus the RSP. And then we're going to go ahead and look at SanDisk. The reason I want to bring this up because I know we talked about memory before. I know we've really only talked about Micron. That's definitely one of the names I have on the watch list. I don't have SanDisk on there because I'm not going to lie to you. Never really was really on my radar. Heard about them before, but then this wasn't a name that I really paid too much attention to. And then if you go ahead and do your research on it, look a little more into it, we know that it was a spinoff from Western Digital. So SanDisk itself, because you can also look at how long it's been around. You can look at a 5-year, because they technically don't even have enough data. You see, in a 5-year window, they don't even have enough data to show it up. So around, what is this? February of 2025 is basically when it came on the market as a, like a spinoff of a company, right? So around that time is when they came onto the market. And the reason why they've been having obviously this explosion is because of the things going on with memory when it comes to AI and things of that nature. So saying why Micron's blowing up and all that type of stuff. So SDNK or SNDK, I should say, sorry, SanDisk, it has had a lot of momentum behind it just because of that, and also great news for it coming out in terms of it getting added to the Nasdaq 100. So now that's more forced buying. The fact that it's going to be part of basically an index. So that's more forced buying into it because now it has to be put into people's, whoever buys that fund. Now it's technically that fund's allocating money to SNDK for their stock. So that's obviously a good sign for them. So we saw them move, I think, in one day, $100. Obviously, had some selling off because, again, you always want to be wary when you're buying near all-time highs, right? Because you can buy near all-time highs. You can see on this session here on the 13th, people loved the news that came out. It was great. Someone, still kept, our people in general, investors kept pushing it up. Someone bought it at 965. Then we saw it sell off, right? So you bought 965, and it sold off about $40-ish. Not saying you're gonna be too upset about that, but again, this is what we don't do. We don't chase the highs. Along the way, if you like this thing, if you just didn't have the patience, you could have bought right here towards the end of March when it touched the 50. That was a good price for you too. That got you around, what is it? The low at 558, high of 651. So between $550 to $650, you could have got yourself a couple shares here or a share or two, or you could have just bought fractional shares, whatever it is, and you too would have benefited of this run from 600 to 965. When eventually we're probably going to see this cap and break through 1,000, right? Because of how fast it moves. But again, you want to be the individual, the investor who buys at key moving averages. Again, each moving average is a deeper discount. Depends on what you look at, right? You could have bought the 50 and then it could have fell to the 72. But you would rather be the person who bought at this level than the person who bought out here. And this eventually is going to come down to this level in this one or this one. Who knows when, but a matter of time, right? And especially if this happens quicker than expected, the person up here bought 965, you're going to be sick. But now, people are always going to be like, oh, well, it depends. 5 years from now, the stock's trading at $2,000. Yeah, you're not going to care you bought at 965. But you definitely would have been more in a better position if you bought at 600 and change when you could have got it right here just for being patient. So in some way, this person who bought right around here could have been watching this from all the way back here from the start of the year, watching it run up, run up, run up, dip, didn't touch the line, run up, run up, run up, finally dipped and touched the line. Boom, bought it. That person was patient, waited around for 3.5 months, 4 months. Now he or she got the opportunity. They got a great name, got in position for it, acquired some shares, acquired some equity into it, and went about their day. And now they're benefiting from this run up here. So again, if this is a name that you feel like you need to, for sure, like, oh, I can't pass this up, I need to get into this, just wait for it to fall to moving average. And if you can't wait for that either, again, it's not financial advice. Um, just do discount percentages, right? You always buy stuff when the 10% off, 20% off when you go out shopping for deals and everything. Approach this the same way. If this was to hit $1,000, 10% off of that, you're buying it at 900. If it hits 1,000, you want 20% off, buy it at 800. It's still going to be better than you buying at an all-time high. That's always going to be the case. I feel like when it comes to if you have money on the sideline, you and your intention is to go ahead and put it in the market. There's dollar cost averaging, which is fine as well. But if you're someone who, hey, I'm sitting on $1,000, $2,000, $3,000, and I want to make the best choice possible in a situation, and you are planning on buying individual names or individual ETFs, whatever that case may be, my take on it is to always wait for a good price. And along the way, have your instruments working, your dollar cost averaging. You have your 401k at work, that's already dollar cost averaging for you. You have your Roth from work, that's automatically dollar cost averaging. But if you are doing it yourself, going in there, actually making your purchases, I think you can have a blend of dollar cost averaging, and you can also have a blend of you being patient, marking out your levels, putting your alerts on for 10%, 20% drops, or putting your alerts on for a moving average drop. That's just my take on it, my thesis on it. So if we go ahead and look at the 5 year weekly on this, obviously it's going to be, parabolic. It's just beautiful to look at, just to see where it was at and see this run up here just from basically, right place, right time period. Just the fact that everything's going smoothly for this company, everything's going great. And then just nice to see, especially like I said, whoever got it down here, $27, 20 or $30, and they live in the dream right now. Then we're gonna close it off with MU, and then we're gonna go look at the site to look at the actual numbers for entry points, stuff like that. But for Micron, same story here. Had hit all-time high back in mid-March, so March 18, 471.34. Then we had that nice sell-off, right? Then hit that 100 again, key moving average, and from then on, bounce back up. It's closing in on that all-time high. We're about $13, $14 away. So that could happen for it. Who knows? But again, you're better off being the person who bought here versus the person who bought here at 471. Person who bought here at that 100-day moving average around 354, definitely in much better shape than this person who's probably just going to break even by the time this gets back up there. But Micron's still looking pretty good, especially when we start breaking above all moving averages. That's when you know, hey, the momentum's on this stock side. And especially we didn't get nothing crossing over in terms of moving averages. They're all kind of going upward and not crossing over each other, not creating any more stories or any other concerns within the stock. Very good to see, very good to see. Then we can look at the weekly on this one. And then be the same thing. It's going to be way above all the moving averages. Same thing, beautiful chart, almost like how SanDisk was. Could have got it way back here sometime last year. So this one's May of last year. You could have got this, roll it all the way up here. And then you could almost see between here and right here, almost consolidation. Just quite a bit, right? That's what I'm seeing. But definitely seeing how this is breaking up. We had an indecision right here. This was an indecision candle that popped up right here. And then obviously the bulls decided we're going to take this up further. So it looks like it's primed to just continue to run up and break out. But I shouldn't say run up like to, you know, something astronomical. It looks like it's probably just going to probably either touch new all-time highs or make new all-time highs. So definitely looking forward to see that happen. And to close out, let's go ahead and look at some entry points for it. So again, this is on the website, thewealthcatchers.com. It's the analyzing stock tool. So I'm going to add that to the link in the bottom of the video. So for SanDisk, we see that from the low, from that point in time where we showed you for the 52-week low, so it's up 3,077%. That's insane. And just year to date, 234%, right? Obviously, weekly chart, there's not enough data. Daily chart, obviously, is going to say wait for a pullback. So these are the numbers. Obviously, the deeper the moving average is, the deeper the discount will be, right? So for 100-day moving average, that's $497, basically $500. 200-day moving average, $300. 253 moving average, 245. Again, for these to happen, obviously something major will need to happen into the name. There has to be a lot of selling off, some crazy news comes out, something insane will have to happen for it to drop that quickly to these moving averages, right? So that's why I bought up the whole 10%, 20%. Those are still good ways to also get into a name that's constantly running up. A name like SanDisk is a name that's constantly running up. A name like Micron, constantly running up, right? Those type of names are going to be kind of tough to try to wait for that moving average. I still think you should, but if you find yourself in a position you can't while it's still running up crazy like that, wait for that 10% pullback, wait for that 20% pullback. Because for them, again, this thing moved $100 in one day. It could move $100 to the downside in one day as well, right? Once it's shown that it could do that to the upside in one day, don't be surprised if it does that to you on the downside in one day, right? Let's flip over to Micron. So Micron, 52-week high was 471.34, and then we see that we're just 3% away from it. So definitely, like I said, right there in range for it. For them, they have a 596% run up from their 52-week low. Year to date, still pretty good. Nothing as impressive as SanDisk, right? It's gonna be hard to try to beat that, but 45% return so far year to date. Again, we've seen these numbers. We're getting so used to seeing these numbers, especially something like since Nvidia came on the scene, something like an AMD came on the scene. Now you got SanDisk, and now you got Micron, showing these astronomical numbers that you could get in a year's return. We're starting to dilute and forget that the average market return is 10%. The SP 500, ideally, over a long period of time, gets you about 9 to 10%, right? So just to put that in perspective, how these companies are crushing that mindset of, oh, let me get my 9%, let me get my 10%, I'll be good. So there's more to go and get out there. There's more to get, right? So, but again, still gotta be disciplined, and also it depends on over the long run, right? Because this, you could give them 10 years, and it just stays flat, right? And it could still be like, oh well, it averaged 37% over it, but when you got in, it's been flat ever since. So you got to keep that into perspective as well. So timing does matter, but also use everything to your advantage. Again, moving averages, buying at discount percentages, dollar cost averaging, whatever it is, that's going to get you into your quality names and into thinking about the long term and also holding on to these quality names, right? So for Micron, moving averages, I'll do the same thing with Micron. Probably 10% drops, 20% drops. Start moving in there if you can't wait for it to fall to 354 on the 100, 256 for the 200, 223 for the 253, and 176 for the 400, right? Because look how far we are. You need a 30% drop for that to happen, a 78% drop, a 104% drop. For these things to happen, it's gonna be pretty crazy. And on the weekly 100, it falls to that 172. That is a probably load the boat right there. 200 definitely load the boat. That's a $121.65 if it falls to that on the weekly. Definitely ideal for it. So that's all I have for this video right now. I'm going to go ahead and get this one up on YouTube and also up on the site. And while I do have you guys here, also put some new tools on here. So we got the calculators on here. We got a compound interest calculator, retirement savings, and a dividend. So these are just going to work off of just with regular numbers, right? Just put your number in, what you want to do. So, I'm pretty sure you all seen a compound interest calculator, right? Put all your expected annual return rate, your time period. It's going to give you a rule of 72, tell you how often your money doubles. You have a nice little graphic chart down here. And then we have your retirement savings. It's going to do the same thing. Your current age, retirement age, how much you plan on saving, your expected return, inflation. We all know definitely you're still up there, 3%. That's a good number. Always put inflation when you're trying to do those numbers. And it's going to tell you what you should have expected around retirement, right? So just some tools just to have there, just while you're there on the site browsing around, just trying to make everything be more in-house as possible. And we do have the dividend income calculator, right? So whatever money you're trying to get in monthly from dividends, what the yield is going to be. Also put some tickers down here. That's some good dividend stocks to look into, like ETFs. And obviously, T is whatever. AT&T is trash, but their dividend at least has been, pretty decent. But the stock sucks, as we all know. The rate of return on that stock is terrible. But the dividend's been hanging in there doing that. But yeah, so definitely have these tools on the site for you to go tap into. Again, you can go on there, reading articles, use the tools. But appreciate you guys stopping by. If you have any questions, comments, definitely leave them down below. And also down there, you're going to be able to find some offers from Robinhood, the offer from Public. You guys will click on those, sign up for those apps as well. Those are pretty good brokerages to be involved in, to go ahead and get started in. So definitely appreciate you guys. You guys have a nice day. Thank you.